Bitcoin is one of the most misunderstood assets in the world. Depending on who you ask, it's either the future of money or a scam that's destined to collapse. And because Bitcoin challenges the way we think about money, banks, and even governments, it has attracted more than its fair share of myths, misconceptions, and outright lies. So in this video, we're going to break down the biggest Bitcoin myths one by one. Whether you're new to Bitcoin or you've been around for a while, this should give you some clarity about what's true and what's just noise. Myth number 1, Bitcoin is just a scam. One of the most common misconceptions is that Bitcoin is nothing but a Ponzi scheme or a scam. People often confuse Bitcoin with the shady projects or outright frauds that have popped up in the crypto space. But here's the difference. Bitcoin is decentralized. There's no CEO, no company running it, no marketing department promising guaranteed returns. It's just a protocol, an open source network where anyone can participate. Unlike a Ponzi scheme, there's no central organizer paying early investors with money from new ones. Instead, Bitcoin operates like math. Miners secure the network, users validate transactions, and the system is transparent. Scams exist around Bitcoin, yes, but Bitcoin itself isn't a scam. It's the tool people try to misuse. Myth number 2. Bitcoin has no intrinsic value. This one comes up all the time. People say Bitcoin is just numbers on the screen and has no real world value. But let's think about it. What gives value to money in the first place? The US dollar isn't backed by gold anymore. Its value comes from trust, scarcity, and the fact that people use it. The same goes for Bitcoin. Bitcoin is valuable because it's scarce. There will only ever be 21 million coins. It's valuable because it's decentralized. No government can print more of it, and it's valuable because millions of people around the world are willing to exchange their time, effort, and goods for it. Intrinsic value is subjective. To someone in Argentina facing hyperinflation, Bitcoin's ability to preserve purchasing power is extremely valuable. Myth number 3. Bitcoin is bad for the environment. This is probably the biggest mainstream criticism right now. People hear that Bitcoin uses more electricity than some countries and assume it's destroying the planet. Yes, Bitcoin does use energy because securing a global decentralized monetary network requires real resources, but here's what's often left out. Much of Bitcoin mining already comes from renewable sources, especially hydro and wind. Bitcoin miners actually incentivize renewable energy by buying excess power that would otherwise go to waste. Compared to the traditional financial system, banks, ATMs, credit cards, data centers, Bitcoin's footprint is smaller. Even industries like gold mining or Christmas lights consume more electricity than Bitcoin, yet they don't get the same scrutiny. So the myth isn't about Bitcoin using energy. It's that Bitcoin's energy use is inherently bad. In reality, it's often pushing energy innovation forward. Myth number 4. Bitcoin is only used by criminals. The myth dates back to the early days, when sites like Silk Road accepted Bitcoin for illegal transactions. Critics still use this as proof that Bitcoin is just for crime. But let's look at the facts. Less than 1% of Bitcoin transactions are linked to illicit activity. Bitcoin is actually a terrible tool for crime. It's traceable. Every transaction is permanently recorded on the blockchain. Law enforcement has successfully tracked and arrested criminals because they used Bitcoin. Cash is still the number one tool for criminals because it's anonymous, untraceable, and widely accepted. So while Bitcoin can be misused like any form of money, calling it criminal money is outdated and misleading. Myth number 5. Bitcoin is too volatile to be useful. It's true, Bitcoin's price goes up and down, sometimes dramatically. That scares a lot of people away. But volatility isn't a permanent state. In Bitcoin's early years, the swings were massive because the market was small. As adoption grows and liquidity increases, volatility tends to increase. Compare Bitcoin today to 2011, and you'll see that the price is far more stable relative to its size. Plus, volatility is the price of growth. No asset that went from $0 to over $100,000 per unit did so in a straight line. The volatility represents the world trying to figure out Bitcoin's true value. And for long-term holders, volatility matters less. Over any 4-year cycle, historically, Bitcoin has been a strong performer despite the ups and downs. Myth number 6. Governments will just ban Bitcoin. A common fear is that governments threatened by Bitcoin will simply outlaw it and make it disappear. The reality is much more complicated. Some governments have tried to ban Bitcoin, but it hasn't worked. You can ban the protocol itself, but it exists everywhere and nowhere at the same time. What governments can do is regulate on-ramps and off-ramps, like exchanges, but outright bans usually fail. In countries where Bitcoin is restricted, like Nigeria, adoption often increases because people need alternatives to failing currencies. In fact, the more the government tries to suppress it, the more it highlights why Bitcoin is needed in the first place. Myth number 7. Bitcoin will be replaced by a better cryptocurrency. There are thousands of cryptocurrencies today which are claiming to improve on Bitcoin in some way. So the myth goes that eventually one of them will overtake Bitcoin. Here's the thing, Bitcoin's biggest strength isn't its technology, it's the network effect. It's the first, the most secure, and the most decentralized. Competing coins may be faster or flashier, but they don't have the same level of trust, adoption, or recognition. Bitcoin is the brand. If you ask someone outside the crypto world to name a coin, they'll probably say Bitcoin. That's not going to change easily. Myth number 8. You have to buy a whole Bitcoin. This one stops a lot of beginners from getting started. With Bitcoin at over 100k, people think they can't afford to participate. But the truth is, Bitcoin is divisible down to 8 decimal places. The smallest unit is called a Satoshi, and you can buy fractions of a Bitcoin, just like you can buy cents instead of a whole dollar. So no, you don't need tens of thousands of dollars to get in. You can start with as little as a few dollars and still own Bitcoin. Myth number 9. Bitcoin is too slow for real payments. Critics often compare Bitcoin's transaction speed to Visa or MasterCard and say it's too slow to be useful as money. But Bitcoin wasn't designed to be Visa. It's a settlement layer. Like digital gold, it's meant to be secure and decentralized above all else. And thanks to second layer technologies like the Lightning Network, Bitcoin can handle instant, cheap payments for everyday use. In fact, in some places like El Salvador, Lightning is already being used to buy coffee, pay for groceries, or send remittances. Myth number 10. It's too late to buy Bitcoin. Finally, one of the biggest misconceptions that the opportunity has passed. People see Bitcoin's price today compared to a few years ago and assume they missed the boat. But let's remember, Bitcoin adoption is still early. Less than 5% of the world's population owns Bitcoin. Institutions are only just beginning to get involved. If Bitcoin does continue to grow into a global monetary asset, the upside is still massive. Yes, the biggest gains are behind us, but saying it's too late is like saying it was too late to buy Apple stock in 2010 because you missed the gains from the 2000s. Bitcoin is a long-term play and we're still in the early chapters. So there you have it, the biggest Bitcoin myths debunked. The reality is that Bitcoin is far from perfect. It's a young, evolving technology, but many of the criticisms you hear are based on outdated information, misunderstandings, or deliberate misinformation. At the end of the day, whether you choose to invest or not, it's important to separate fact from myth, because Bitcoin isn't just about price, it's about freedom, decentralization, and a new way of thinking about money. Of course, none of what I'm saying is financial advice. If you enjoyed this video and you want to see more Bitcoin related videos, make sure to like and subscribe to the channel. Thank you for watching and I'ma see you in the next one.